that in the classic period, and I want to point out the classic period, what I mean by that is the early parts of the 20th century up until the time computers became household items, very few people charted. In fact, charts were really considered to be something along the lines of conspiracy theories and very looked down upon by the establishment. And there were very, very few chartists. Maybe 1% of all people that were trading were chartists, or were investing were chartists. The chartists did tend to be traders, and they had a totally different perspective on price movement. So it was a really very different thing prior to those early computers coming out. And what you would often see, and I've got some old charts that show this, you'd often see the charts forming really perfect formations. The head and shoulders would be perfectly balanced. Flags and pennants would be just perfect. The bounce backs to lines and all these things were just perfect. I've got a silver chart from just before the computer thing got big, when I was trading silver back then, and the chart for silver was just a beautiful chart. I saved it for all these years because it was just such an elegant demonstration of the value of watching charts. But now I think what we've seen happen is everybody's looking at the charts. So if we look at this line here, here's a line that comes across off this top, touch down for the bottom, and a savvy trader might start to say, well, let's see what happens. We come up, we form what could be a head. It pulls back. It doesn't come down to the original neckline. Why is that? It's probably because everybody can see that neckline, and everybody's going to anticipate that we're going to make another run up. So people jump in to catch that last little move. They jump in with some enthusiasm because they're confident it's going to happen as a trader. And guess what? Especially we've got this other line here which supports it. So, you know, we've got two reasons. I mean, it's not written in stone. It has to come down to the neckline when you have that trend line there like that. But we make this a little higher advanced. You know, the shoulder is higher than that shoulder. We have a double top, and that is a relatively beautiful double top in this shoulder on this side. Then we make the decline. We come down through the neckline, and we come down similar distance from the neckline to the bottom of the move as there is from the neckline to the top of the move. Interesting, and pretty much the way it's supposed to be. The snap back to the line, in theory, would come back up and touch the line if it was going to be technically perfect, according to the way things often used to work. But it didn't do that. Why is that? Because everybody knows it's supposed to come back and touch this line, and they want to, you know, be prepared early, and so everyone knowing it stops the action from being quite so perfect. And then we have our day today, which was obviously a heavily down day. Excuse me, and I don't want to make too much of a down day like this, because these are significant days, and I do think we're beginning our downtrend. But the reality is, we're down here in the 10,950s from the from 11,400, 400-point move on a 11,000-point market. Yeah, it's nothing to sneeze at, but it's nothing that's like so unprecedented we have to freak out in and of itself. But the point is, it didn't snap back to the line the way it should have according to classical chart theory. We'll go to the dollar for a minute. And I'm not sure this is a valid line, but why, if we have a line with 2 points, this doesn't quite come down and touch the line, and it comes back up, that breaks the line a little bit. Why do these little irregularities happen? Because, for example, here, that may have been a raid on potential longs who had buy instructions sitting right here, buy stops, and they come in and take those buy stops out, and they bring the market back down, and the shorts make money. Here we break below the line. Well, guess what? This line's got 2 points on it. Everybody knows the line's here, and everybody knows that there's going to be the short side of this market, and this is the U.S. dollar, where there's going to be a lot of people thinking that this is a short side is a good side to be on. They want to maybe come in here and take out these shorts, which is what it looks like this has been doing. Now, to me, in this kind of an economic environment, that does not mean that there will be a bull move. But if you look at the stochastics and you look at the Williams percent R, they're down in the lower side of the range. It wouldn't be a shock to see this pull up. Wouldn't be a shock to see it pull up into that range there. So I just think this is this chart line is telling everybody where the shorts are, and they come in and clean them up, and then take them higher, and make some more money. Come in and look at the 30 we just looked at. You can see this just another chart, but again, didn't make the snapback to the line. S&P 500 moving along in a sideways channel. Multiple top. Again, not a perfect triple or quadruple top or anything, because these aren't hitting exactly the same prices in here. But you can see it moves along in this channel, breaks out of the channel, does not snap back all the way to the line, and it pulls back down. If we look at gold, well, gold is starting its parabolic move up. How far that will extend, I don't know. You know, we just saw it happen in silver. Silver made a rocket run. It reached a crescendo, and then it collapsed. If gold chooses to move that way, that dramatically, it's probably going to be similar. But I can't predict the future, so I'm just saying it could happen. Really, what's good for us as long-term buyers of gold and silver is to have resting periods so the market can base. Because what happens when these stocks run up like this is that they chase out, you know, and they use up all the buying money that's available at a particular period of time, and that's when the market falls. No buyers, no price movement. If all you've got sellers, no matter what the real value is underneath it, the sellers will drive the market down. So, you know, gold's going to do what it's going to do. I don't have a particular need myself to see it rocket up to 2,500 or anything like that. I'd rather see it pull back to the 1650 range, or I don't care where it pulls back to. I'll buy more of it. 1550, that'd be great. But, you know, it's preparing to make kind of an accelerated run is what it certainly looks like. It will be interesting to see what that does to silver, because silver had its little rocket run back here, had its collapse, now it's basing. The basing is really good. This is a time when people can accumulate. Prices are relatively stable between about $34 and $39 roughly for a while. Now they've moved up a step, and we're seeing them from sort of $37.50 up to the $40, $41 range. Kind of basing. You know, we'll have to see. We've got here's a low, here's a higher low, here's a high. We need to see a higher high to see if we've got an uptrend, or if we're just going to continue basing. I'm really okay with it basing. I think the inevitability of higher silver prices is absolute, and that's just an opinion, but it is my opinion. So therefore, I'd like to see it base as long as possible so I can continue to accumulate. You look at the currencies and you look at the US dollar, this is not a pretty picture. It's down through the trend line, snaps up to the trend line, and it's weakening down in here. Very much not a pretty picture on the UUP, which is a power share bullish fund on the US dollar. Here's the Euro ETF. Fairly sketchy stuff. Fairly sketchy stuff. Here's Euro to US dollar. Really kind of irrelevant in a way, because I personally wouldn't take a bet in either direction. The Euro's got problems, the dollar's got problems. Here's the Euro to Swiss franc. I would want to be on the Swiss franc side of this thing. But even the Swiss franc is not backed by gold. It's just a more sound currency. In the Swiss franc against the dollar, you really would like to have been on the Swiss franc side of that thing for a while. We'll fly through here. Here's AGQ, which is a gold trading vehicle, excuse me, silver trading vehicle. You might be interested in it. Go take a look at it. It's been on this little upward slide here since the fall, since this collapse, building its way back. Again, higher low. We're looking to see if we can make a higher high and build ourselves an uptrend. No telling if that's going to happen. Trying to go through this quick as possible. Some of my dividend stocks that are worth looking at. Coca-Cola, still up in high territory. But again, it's a premier stock. Abbott Labs had a pullback. AT&T, look at AT&T. It was up in the 3180 type range. Now it's down to 2840. That's not a huge pullback. Maybe what, a 10-ish%. Pfizer's having a rough time. CenturyLink, Pennant Park Investments. I have no idea if these guys are solvent or not, but they certainly have seen a pullback in their value. Johnson & Johnson, and I don't recommend any of these stocks, by the way. I think picking a stock is too complex for me to make a recommendation. McDonald's, interestingly strong, you know. Again, they supply food. Pepsi, and they have food subsidiaries, but they have been hammered a little bit. 63, was it 72-ish? That's $10 on a $70 stock. That's decline. Southern Company, like Southern Company a lot. Own a little bit of Southern Company. Little concerned. Here's this topping formation. You know, we had this spike down day, whatever you want to attribute that to. Built itself back up. Touched this. I don't see what I can call a formation, except for this gradual upward wedge thing that's happening here. It is vulnerable, obviously. These were probably people sitting on some shorts down here, but who knows? There's that. Kinder Morgan Energy, big decline there. Clorox, known for paying a good dividend, down to $64 from $75. Where's a good place to buy a stock like Clorox? I'm not entirely clear, but it has been a good payer. Emerson Electric, big decline, 61 to 42. But another company that typically has had good stock dividends. Here's my little personal disaster. Fortunately, I don't own too much of this, but we were moving along on this trend line nicely. I thought maybe we were building a base. No, we broke it. We snapped back, and you notice that's happening in China. So that's a pretty nice, clean little chart there. I don't know how many of the Chinese look at charts, but that's a very nice snap back to the line. Good sell signal right there. However, I didn't. Really, because I'm buying this for a very long term. But you saw it move down this line, and then it really fell apart. You know, so it's had a pretty good decline from the 22-ish area, 23 area where I purchased it. Not take a beating, but you know, the Chinese probably going to be around for a while. Archer Daniel Midlands, the evil food empire, had a big down day here. $10 off a $38 stock. Not very encouraging. Don't know what to make of these. I do try to track a lot of dividend payers. Do we look at Coke? There's Coke. Mohawk Industries, the leader in flooring. Consider what's going on with housing. Very weak. I sold what I had up in here and was happy to do so. It's down now here quite a bit less. So you see, we do have, and these are substantial declines. This is, I mean, taken by itself, any stock can have this kind of move. But it's a 68, didn't just go to 48, it's gone to 43. What's that, $25? That's a substantial decline per share. Look at the telephone company. Did we do that already? No. There's a topping formation. Down, down, down. A little rebound, a little consolidation. I would expect to see some more down on this. I think this is going to go back to the area where it was for such a long time. Let's see if we can dig it up here. You know, back here it was in the 20s, the low to mid 20s. I think we're going to see that again. It's probably going to create a bottom formation in here, would be my guess. Just a guess. $24 maybe. So you can see